Let us see the next question. ABC Limited is going to appoint a technical consultant. It is to be appointed for 3 years. Discounting rate of the company is 25%. Consultant has given following options for payment. A. Make payment of rupees 1,95,200 today. Or B. Make annual payment of rupees 90,000 per annum from end of year 1 to end of year 3 annually. From ABC Limited point of view, which option is better? That is a question. I want you to tell me answer of the question. Dear students, over here, the question is providing the information that you are going to appoint a technical director for a time period of 3 years, technical consultant. Now, for the purpose of like making payment, there are two options that say we have. So let us see that say how we can take decision. Method number 1. There are two methods by which we can take decision. Method number 1. In that method, how we will take decision, let us understand. As far as the option A is concerned, in that option, you have to make one-time payment. How much? Rupees 1,95,200, that is in the year 0. And option B, in that say you have to make payment of rupees 90,000 per annum. So annual payment. 90,000 rupees. So what will happen, friends? 90,000 into 3. That comes to 2,70,000. This is the way, say we can say that say we have two options. And we can see that say option A is a cheaper option. So we should make payment today itself. This is the way I am thinking to write answer. Am I correct or am I wrong? We understand that say this is wrong. Why this is wrong? Because we understand that say the concept of the time value of money has not been considered by me. What happens at say over here, instead of doing 90,000 into 3, what I have to do? I have to take the present value. So it is 90,000 into PVIFA at the rate of 25% for 3 years. You have to discount that in present value term. So it is 90,000 into PVIFA 25% for 3 years. That comes to 0.8 plus 0.64 plus 0.512. So it is 90,000 into 1.952. So the final answer is 1,75,680. We have to make a comparison of this two. That is 195,200 and 175,680. And we have to select an option which is having so the lower present value of the cash outflow. So we should go for option B. This is what we understand. And this is given a technical name as a present value method. This is given a technical name as present value method. Please write an answer. Please write an answer. I request all of you to write this portion also. And based on that, so you make the final selection. Write on heading method number 2. Method number 2 is given a technical name as Equalised annual method. Let us understand and say how to apply the equalized annual method for decision making. Everybody is requested to pay attention. See, as far as the option B is concerned, in B option, you have to pay rupees 90,000 per annum. This is required to be paid from year 1 to year 3. Simple. In option A, we are required to make the payment of rupees 1,95,200, that is to be paid in the year 0. In order to make both options comparable, can I do working like this? That per year, option B has expense of 90,000, option A has 195,200 divided by 3. So what is annual expense? 195,200 upon 3. Annual expenses 65067 rupees per annum. Can we make a comparison like this? Again friends, we understand that over here there is ignorance of the concept of time value of money. Why? Because over here, say we are dividing only by 3. We cannot divide it by 3. Why? Because we understand that say this is year 0 expense. So dividing by 3 is ignoring the time value of money concept once again. So what we have to do? 195,200 divided by PVIFA at 25% for 3 years. 195,200 divided by 3 years annuity factor is 1.952. Recently we have calculated the same and the final answer comes to rupees 1 lakh per annum. We have to make a comparison of both of them, and again we will select an option which is having such a lower cost. We understand logically like this: year 0, year 1, year 2, year 3. If at all every year I am spending an amount of rupees 1 lakh, it means that say in the year 0 we are spending 195,200. Every year, if at all we are spending an amount of rupees 1 lakh, it means that say in the year 0 we are spending an amount of rupees 195,200. This is what we understand. So we are making a comparison in this way, that this is the annualized expense which is compared with 90,000, and we select an option which is having lower cost. Further, only for understanding purpose, we can say that say option B is cheaper than option A by 10,000. That is 1 lakh minus 90,000. This amount of the savings is discounted in present value term. So present value of that is 19520. This is present value 19520. And it is exactly the difference between the answer that we have found in the first method. In the first method you can see it is 195,200 minus 175,680. This is what we understand is the amount of savings on annualized term, discounting at 25%, and we get this as a present value. Okay. So this is only for understanding purpose, this cross verification. From examination point of view, you can do answer with either first method or by the second method. So please write down one line answer. ABC Limited is advised to make annual payment of rupees 90,000. This is the answer.